It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we talk your property news 7 days a week. And of course, you can hear us on iHeartRadio, Spotify, Apple Podcasts and Amazon. And if you've had one of those very, very busy weeks, the good news is it is a Friday morning and we're looking ahead to another weekend. Although, having said that, you might have had a busy week and you're heading into an extremely busy weekend with all of that potential real estate to look at. It is Friday, October the 25th. And talking of property, conventional wisdom suggests that long-term property ownership ensures profit, but new core logic analysis does show that this isn't always the case. Now, they've reported in the June quarter, sellers who made a profit who held on to their homes for a median of almost 9 years, while those who took a loss held their properties for 8 years. Interesting. And for units, hold times made little difference. Properties owned for decades, generally, they say, yielded higher profits with gains of up to $800,000. Although, of course, we know that there are those that have made millions, while short-term flippers often faced challenges, particularly with rising interest rates and market conditions. So it'll be very interesting to see how that all shakes out, especially around the flippers for 2025 with some of those rate cuts that we are eagerly looking forward to. Well, since it's a Friday, it's time to catch up with our next guest, and that is Rebecca Baddaley from Loan Market in Geelong. Good morning, Rebecca. Welcome back to the Real Estate Breakfast as we do that last big push into Christmas.
Yes. Good morning, and thank you for having me again. You are totally right. This year has absolutely flown, and a scary thought to think if people are buying now, then they've only got a 60-day settlement just to be able to get in before Christmas now. So it's gone quick.
Yeah, it's a mental time, I would imagine, for the home loan market, for mortgage brokers like yourself trying to sort of navigate that final push.
Yes, it gets a bit tricky near the end of the year, and that's mainly around whether people do want to get into their homes prior to Christmas or after, and it's all around making those dates happen while also trying to see if you've got 20 people coming around for lunch.
Yes, well, good luck with all of that. Now, from the 90s to this year, you've seen some interesting data of the increase of the average Australian house. So tell us a little bit about that.
Yeah, so Ray White and Loan Market have collated some data looking at those mid-90s to the recent years and looking at the average house price in capital cities. It's quite staggering. 133,000 was the average back then, and now we're looking at 997,000. So an increase of 748% over that period.
Well, I guess we shouldn't be really too surprised. It's always good to look at the hard numbers and different playing fields, of course, for different generations. And sometimes I guess that might be hard to explain to millennials that are saying, gee, my parents just had it so much easier back in their day.
Yes, it is something that we hear quite often and people get quite frustrated about, but it is all relative. You know, increases in income are also happening alongside of that as well, but something to be mindful of.
Yes, now in 2024, it's going to be a year, I think, when we look back on as a survival in the real estate market, particularly in the home loan sector, because people have hung on, having made incredible sacrifices with their household income expenditure. And just because the mortgage cliff, which we spoke about a couple of days ago with Eliza Owen from Core Logic, just because that never came along, it doesn't mean that people right now are not balancing on that cliff ledge with money money every week somehow being found to pay for the mortgage. So a question for you this morning is, what impacts have you seen with the rising interest rates this year having on homeowners and those prospective buyers?
Yes, so in relation to the existing homeowners, with the variable rates especially increasing, it's put a huge amount of pressure on people in terms of their outgoing commitments and higher repayments. In terms of prospective buyers, the higher rates has actually seen the reduction of borrowing capacity, and what they used to be able to buy for potentially 2 or 3 years ago is completely out of the picture at the moment. So having to rejig their expectations in terms of what's possible. We've seen a lot of people needing to refinance their home loans, potentially consolidate debts, or potentially even sell assets off so that they can even keep potentially their own occupied property or keep their family home. But I would say that hopefully, fingers crossed, we're coming out of that. But it's all about education and understanding your numbers at that point.
Yeah, and if you're one of those people listening in this morning and you've been able to pivot in 2024 with all of those things that Rebecca has just talked about, well done you for managing to keep your head above water. Well, we'll come back in just a moment and we will continue the conversation talking about the lending market. We'll continue with that conversation next.
We help to break down real estate every day to help you better understand the Australian property market.
Well, I see that apartment lobbyists are backing a critical review of the Victorian building industry watchdog following a years-long repair dispute causing financial and emotional hardship. Now, the investigation found the Victorian Building Authority systematically failed to address homeowners' concerns, allowing poor workmanship and unethical practices. Australian Apartment Advocacy revealed that 58% of Victorian apartment owners reported defects. That's a hell of a lot, isn't it? 58%, with many of them facing delays of up to, wait for it, 7 years of repairs. And the review's findings have prompted calls for a stronger regulatory body to protect buyers from substandard construction. So I certainly hope that you're not part of that Victorian building industry watchdog's finding.
You can join the conversation every week on the Real Estate Podcast.
And it is a Real Estate Friday. Looking forward to another weekend. We are talking about the mortgage space, the lending space with Rebecca Baddaley from Loan Market in Geelong. And a couple of weeks ago, we covered quite extensively the home loan bridging options and how they work. Now, if you missed that, Rebecca, what are you seeing in terms of the rise in the bridging loans space? And do you think that this is likely to continue? And is there anything that you think borrowers need to know before getting signed up for a bridging loan?
Yeah, so this has changed dramatically in the last year or so. And what we're seeing is previously that clients would be able to potentially hold both properties while they made the transition to the new property or sell that property. But bridging has gotten a lot of people out of trouble, and it is definitely a short-term option that has allowed people some flexibility in their next purchase, essentially. And a lot of the reason that this has happened is around, one, the potential value of the property having been inflated potentially in that 2022 era, or that borrowing capacity has dropped with the rate rises, and therefore what used to be an option for them simply isn't. So it's become a great option for people to provide flexibility, and definitely something that is a lot more common than it used to be.
And I guess that there must have been these situations when people bought at the top of the market, and if they were in that sort of 2021 cycle and they were looking at selling maybe 2 years later when there was a dip, that could have been a real sort of problem if you're going into a bridging loan and then you're just not able to sell your property. There would have been those cases out there.
Yes, and unfortunately, we have seen a few of those come through our office, and it's horrifying, to be honest. They do have shorter terms now, and a lot of the reason for that is because of that dip in the market. They do have quite high buffers on things for that reason, but it is scary kind of seeing those valuations drop, that's for sure.
Yes, never a great look on the balance sheet if you end up getting caught up in that whole scenario. Now, let's just have a look at the recent home lending market, because there is this uplift at the moment in property prices, which is fair to say. So what are you currently seeing at the moment out there?
Yeah, so definitely in the Geelong market at the moment, there's a massive uptake we're finding of people purchasing. So a lot of purchases are coming through our team at the moment. And I think that's because people are becoming potentially more comfortable with the cost of living, letting the dust settle, understanding their numbers and being able to make some decisions. What I think will come from that, however, is although there might be plenty of choice at the moment for buyers, as rates move or, stock gets a little bit lower, then this is going to become pretty competitive, I think. So something to watch out for. I would say that we're preparing our buyers to ensure that they're pre-approved or definitely understand their borrowing capacity so that when they find something that they want or really like, then they're able to act quickly because it is getting pretty hot out there at the moment.
Good on you, Rebecca. Well done for representing Loan Market there in Geelong on our Friday morning, and good luck with that wind up to Christmas. A very busy time, and thanks for coming on to the Real Estate Breakfast. Enjoy your Friday.
You too. Thanks so much for having me.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week, only on the Real Estate Podcast.
I see that the housing stock levels in Perth, they have been steadily rising since our last conversation. Where do you see them currently standing, and what are the impacts that you're seeing on the market as a result?
They're sitting at the moment a little bit below where they were last year. We've come up from the very low levels we were at, where there was sort of less than 2,000 houses to choose from on the entire market. Now there's about 3,000 or just over, which is great because we predominantly buy houses.
And are you seeing listings rise in specific locations more than in others?
We are, and we sort of predicted this, and part of the reason why we haven't bought in certain areas is because we see that the transient demand in areas like Rockingham, local government area, and Mandurah and Armidale, for example, these are areas that have been driven from the bottom up by investors, and they've had fantastic price growth. So congratulations to anyone who got in early in those markets.
We connect you to the best real estate information across Australia. The Real Estate Podcast.